Welcome to the Sharkpreneur podcast with Kevin Harrington and Seth Greene. Kevin Harrington is the inventor of the infomercial, one of the original sharks from the hit TV show Shark Tank, and has generated over $5 billion in TV and digital direct response sales. Seth Greene is the world's first trusted authority on cutting-edge direct response marketing, a best-selling author, and the only 3-time Marketer of the Year nominee. On the podcast, Kevin and Seth interview sharkpreneurs who share straight talk on what it takes to explode your business.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.
Welcome to the Sharkpreneur podcast. This is your co-host, Seth Greene. With me is the inventor of the infomercial and the original shark on the hit TV series Shark Tank, Kevin Harrington. Kevin, thanks so much for being here.
Thanks, Seth. Awesome to see you today. Let's have a fun day.
Yes, today we have the good fortune to be interviewing Jacob Koenig, a managing director and partner over at the Woodbridge Group, a world-class mergers and acquisitions firm. Before becoming a managing partner and joining Woodbridge, Jacob spent 12 years, most recently as executive director of Goldman Sachs Asia. And now we're here to talk about Woodbridge and their world-class mergers and acquisitions company. Jacob, thanks so much for joining us.
Thank you, Seth and Kevin. Good to be here.
Hey, awesome, Jacob. Hey, Jacob, question to get started. Over the years, I've been involved in a lot of entrepreneurial startups, and generally small startups, companies, even a company like a Celsius that ended up becoming worth billions of dollars. It started as a $2 million company. Fortunately, broke through to the big time. But where do you guys start in terms of looking at an asset minimum value before you're interested in taking on a exposure to something?
Yeah, that's a great question because we are a lower middle market focused firm. I think a lot of M&A advisors out there call themselves industry experts, have a certain maybe number of industries that they look at specifically. We say we can deal in all industries. What we specialize in is the companies that are doing 1 million of EBITDA up to 50, 75 million. We can take those on.
Okay.
Our average size deal is about $20 million. So our average EBITDA of our clients is around 4 to 5.
Awesome. Okay. More reasonably towards the lower side than I had expected, but good, because these are the kinds of businesses we're dealing with.
Exactly. And our space is I think unique in the fact that it's so fragmented. There's no one in the lower middle market in the advisory space that has more than 1.5–2% market share. And so that's what we're really aiming to do is show the world that this is an enterprise that can be scaled up, and that we can take that market share.
What are some of the biggest mistakes business owners of those size companies are making when it comes time to thinking about selling or being acquired?
Look, the biggest mistake you can make is trying to do it yourself. I think we see oftentimes those who have tried, and we've got clients who've tried and failed and then come to us, and they'll tell you firsthand, having that split of attention is impossible. I mean, you have to keep running your company. If the performance of your company starts to tank, the deal is going to fall through. A good buyer is going to come in and try and retrade it. So, having a broker in your corner, the advisors who can help you through this process and keep everyone organized, take that, project management point of view, that's crucial. And the number 2, I think, biggest thing that we see is ego. Ego gets in the way. People are trying to sell their company and get out from their company, but they're only saying how much they're doing and how great they are and what, how much value they're adding to their company. So I think one of the things that we teach all of our clients right off the bat is explain how your company can run without you. Show that, bring in people who are underneath you, who could come in and take over. have them really be the face of the negotiation, and that really does go a long way.
So Jacob, one of the things, there's awesome trends now in this direction of artificial intelligence, AI, a lot of startups. When you look, if someone comes to you with a startup with some great assets and software, but no sales, is that something you can still get involved with, or do you actually need to see that there's execution of sales in the process?
Yeah, I mean, we're pretty strict with who we take on as clients. We would not take someone on unless they have proven out that they're able to make money, that they have a track record of at least $1 million of EBITDA.
Yeah.
Sorry, go ahead.
No, I was going to simple answer, but I think we definitely have seen companies that are growing companies that are early stage. If we can show at least that there's a trend there towards that $1 million number, that's still important. We find that when you go to market under $1 million of EBITDA, the types of buyers that you get back are just not usually the same level of buyers that we really want to be dealing with and can, again, successfully do a lot of deals with. It's going to be a much different process.
Yep.
You've literally got books filled with case studies of businesses you've been able to help successfully get acquired or exit. Can you share one or two of them with us in terms of like kind of the value you're able to add?
Yeah, no, I think one of them is a client of ours, a former client who is now working for us, Ross Joel, his company Broadcast Med was actually the first company to do a live internet stream of a surgery, and it was something he went on television, talked about on a bunch of different talk shows. He is one who actually also tried to sell his company not only through other sort of big name brokerages, but also by himself. And he can tell all of our clients about that experience when you're working with these staid kind of old fashioned M&A brokerage shops, and we call ourselves an M&A advisory firm on purpose because we are really different from a brokerage. We don't just take on a client, get a monthly fee, and just try and let it keep going on and on and on. We have a timeline-driven process. Everything that we do is process-driven. We understand that you have to go out to market. It's a numbers game. Ultimately, if you're only going out to the people that you know, to the people that you think are going to be the best buyers, this is not the top-level Goldman Sachs billion-dollar type deals that we're doing. In those deals, there really are only a handful of potential. There's only a few buyers who have the amount of money to actually make a deal of tens of billions of dollars come to fruition. When you're dealing in the lower middle market space, a $5 to $20 million deal, there's literally hundreds of thousands of potential buyers. And so to close yourself off from them and not go to the largest possible buyer pool, you're just doing yourself a disservice. And so Ross speaks, I think, quite eloquently to that.
Great. Hey, Jacob, one of the trends I see in the marketplace, companies that they're doing roll-ups, right? They're making acquisitions as part of the bigger company, whether they're, I've seen them in plumbing, air conditioning, home services, cybersecurity. And do you guys get involved in helping companies do roll-ups?
Absolutely. Yeah. I mean, we focus on the sell side. So we represent our clients as sellers going into these roll-ups.
Okay.
Certainly it has been a major tailwind for us.
Nice.
Actually, the last couple of years, we saw a lot of the big names of private equity coming down into the lower middle market space as part of this roll-up strategy. And so we saw this in the HVAC space. We had a client that did mold remediation, actually in funny enough, in the desert, but houses get mold no matter where they are. And so, those deals are usually some of the best because especially if it's the second, third, fourth, eighth company that's rolled up, the buyers know what they're doing. The documents come over in very clear, concise way that doesn't require a lot of extra negotiation. They know all the nuances. it makes for a much easier negotiation and LOI to close process.
Yeah.
You've got
Awesome.
a number of partners at Woodbridge with literally combined hundreds and hundreds of years of experience doing this. Can you talk a little bit about the volume of deals number of deals you're getting done and the dollar volume of transactions you're pulling off?
Sure. Yeah, I think we did in 2022 was our largest number of transactions. We had 32 deals done, and in 22 it came back down a little bit to 23 deals, I believe. This year to date, I believe we're at 13 or 14. I'll need to double check, but I think we've done in the last 2 years, as I recall, $2 billion of liquidity being released out to the market. So it is a huge number, and it's something we're very proud of. And last year, I think it was the worst year in a decade in terms of the overall M&A volume. It was the lowest since 2013. So I think we're quite proud that we were able to keep things moving as well as we did through that process, through that period. And we're definitely seeing a nice bounce back year this year. Again, private equity groups, they have money that's sitting on the sidelines, this dry powder, and if they don't deploy it, they might have to give it back. And so they are quite eager right now to find these right opportunities, and as Kevin alluded to get the roll-ups done, and it's definitely a seller's market.
It was one of the questions I was going to ask, because as an investor myself, I invest in businesses, funds, et cetera. Do you have opportunities for what's a minimum investment? Yeah. If you take investors from outside, or is it mostly internal and people you're already doing business with?
Yeah, no, I mean, certainly we go to as broad as possible a group of potential buyers. So we're always happy to meet new potential investors and add them into our database, into our distribution. Yep. I would say we specialize in majority deals, majority stock deals. So if it is a cap raise or a minority transaction, it's something we have done in the past, but it's not something that we specialize in. So we tend to see most of the transactions that we do involve some level of equity role. That is where the seller maintains or gets an equity stake in the new combined entity. But usually it's going to be, at most 40% of the transaction would be that rolled equity.
Gotcha.
Yeah.
How do you go about, I mean, you're in a high level business, Goldman, coming out of Goldman, obviously you're doing smaller deals than Goldman, but how do you go about finding your network, your new deal flow? Do you go to events? Do you go to trade shows? What's the process for your industry?
No, that's a really great question, because this is another area in which Woodbridge is totally different, breaking the mold from the M&A industry. Most of our peers do that. They rely on their relationships, rely on this networking, go to all the industry shows and so on. We do that as well, but we actually generate the vast majority of our clients from direct marketing.
Oh wow, I like that. That makes it scalable. Okay.
Exactly. We've written 9 books. The 10th one is being published and sent right now, and we send them out to 300,000 business owners across the U.S. and Canada. And we've been building the brand, for 10. We've been around for 30 years. We've been sending these books out for the last 10, and it's been a major driver. We see every time that we send a book out, all of our website interactions, incoming phone calls, everything goes through the roof. So that's been a major part of it. But we also do a lot of just Google spending. We pay for the AdWords, and we've found that to be quite successful as well. And it's something that we've seen people come and go and try to replicate. But again, having that brand and having the proven track record of success is not something that other people have been able to really come up and eat on.
Yeah.
Well, we greatly appreciate your time, Jacob. We know it is incredibly valuable for our listeners who might fit into that $1 million in EBITDA category and greater. Where should we send them to learn more and get their hands on one of those 10 books?
Absolutely. So you can go to our website, www.woodbridgegrp.com. And from there, it should be pretty easy to navigate and find all the resources that you need.
Awesome. Well, we greatly appreciate your time. This has been Seth Greene and Kevin Harrington for Sharkpreneur with Jacob Koenig of Woodbridge Group. Jacob, thanks again for joining us.
Oh, thank you. It's great to.
Thanks, Jacob. Look forward to sending you some clients.
Appreciate it.
All right. Take care.
You too.
Thanks, everybody, for watching or listening. We will talk to you or see you next time.
Why do so many businesses struggle while others seem to explode overnight? Do you wish you had the secret to this type of exponential growth? Now, I've scaled more than 20 businesses to over $100 million, and it's not just luck. In my new book with Mark Tim, Mentor to Millions, you'll learn the repeatable framework I use in all my business ventures for massive success. Order at kevinmentor.com and get over $1,000 in bonuses. Head to kevinmentor.com.